recording.
You guys should see all that on your screens and just accept there. All right, December 20th. Let me get to right thing. I'd like to make an acknowledgement before we start our meeting, but I will call the meeting to order right after that. We meet today on settled indigenous land, which is the traditional territory of the Chinookan peoples of the Wasco, Wishram, Warm Springs, and Grand Ronde tribes. Let us honor this land and traditional native stewards, past, present, and future, and strive today to embody the commitment to a cultural equity and reconciliation, ecological conservation, and sustainability. I hereby call this meeting to order at 4:01 p.m. Tia, will you take roll?
Yes. Greg Peck, Chair.
Here.
Megan Ramey, Vice Chair. Megan Larrabee.
Here.
Uzella.
Here.
Elazar. Tamara.
Here.
And Matt.
Here.
All right, all yours.
All right, thank you, Tia, appreciate it. All right, agenda item number 3 is approval of the November 15th meeting minutes. That was sent out in your packet. Hopefully everybody had a chance to review. Are there any changes that the board members would like to make to those minutes?
Thank you for the nomination.
And thanks for getting meeting minutes out soon. Appreciate it, so it's fresh in our mind.
Well,
Yeah,
listen,
and you got nominated, but you
I
just
read
found
that.
out that way. Yeah, that's good. Figured
Just
treasurer.
the right time, didn't you?
Yeah, it's like, oh, okay.
And it even said Greg there, Greg nominated. Yeah. You're welcome.
Thank you.
Okay, hearing no changes, I'd entertain a motion to approve the minutes.
So moved.
Thank you. Tamara, do I have a second?
Second.
Thank you. Any further discussion? Okay, all those in favor of approving the minutes from November 15th, please say aye.
Aye. Aye.
Okay, any opposed? Chair votes aye. Minutes have passed. Do we have any public in our meeting today that would like to make a public comment? Okay. I will not read through the stuff there. I don't know that I've ever read through that. Someday. On to agenda item number 5, our financial audit report. AJ Olson from RTO and Company is here to present the audit. AJ, we'll turn it over to you.
All right. So I think you should all have a digital copy of the financial statements, and then there should be 2 separate one-page letters. I'm gonna go over the financial statements first, and then we'll come back to those letters at the end. So my goal is just to kind of give a brief overview of the financial statements, but happy to cover anything in more depth if you guys have any questions or anything you want me to talk about a little bit more. But for now, let's go ahead and flip to page 6 of the financial statements. So this is the independent auditor's report. This is where we give our opinion on the financial statements. One thing I just want to make clear, financial statements themselves are the responsibility of management, and our responsibility as your auditors is to give our opinion on them, which is this report is where we do that. And when we give an opinion, we're just talking about within materiality, which if you look at the first sentence of the second paragraph there, we give an unmodified or clean opinion. So that's basically what you're looking for, which means we think that these financial statements are fairly stated within materiality. Most of this report kind of goes over those things, those responsibilities of management versus auditors' responsibilities. So I'm not going to go over them too much, but that's kind of the gist of it, is that second paragraph right there where we give that opinion. So if we kind of move into the numbers part here, we flip to page 11. This is the statement of net position for the government-wide statements. This is similar to a balance sheet, so it's going to show your assets and your liabilities and then your ending net position for the district. One thing I just want to point out, the government-wide statements include long-term assets and liabilities, whereas the fund statements do not. So your ending net position for the year was sitting at about 4.1 million, and most of that is going to be your capital assets. Right now, the district doesn't have any long-term debt, so that doesn't play a role, but 4.1 million looks like about 3 million of that is capital assets, and then the remaining 1 million would be the cash on hand. If we go to the next page, this is the statement of activities, so it's gonna be similar to what a profit and loss would be for a business. Shows all your expenses and revenues for the year. One thing I want to point out here is the depreciation expenses included, because these are going to be on the same basis of accounting as the statement of net position on the prior page. So, and also, any capital purchases you make during the year are not going to be included in the expense since they're capitalized as an asset on the net position on the prior page. If you take a look at the bottom, net position matches the prior page at 4.1 million. Also, we had a prior period adjustment this year, and that's related to the switch from GAAP basis statements to modified cash. That ended up restating prior year's net position by close to 400,000 once we took out mostly kind of your grants receivable was most of that. Also some property tax receivable, those kind of things. So basically these modified cash statements are right now showing just cash in and cash out, and then capital assets. That's really going to be the only difference between the government-wide and the fund statements currently. We go to the next page. This is your fund statement balance sheet. And so like I already mentioned, if you look at the bottom, ending fund balance on the fund statements is about 1 million, and that matches your cash on hand. Slight difference for some credit card balance that was at year end. But really, I mean, this is just the same information, just excluding capital asset activity. So if we go to the next page, kind of just again, coming back to what those differences between the statements are, this is a reconciliation of the balance sheet to the statement of net position. The only difference being capital assets, as you can see here, how we get to between the fund balance statement to the net position statement, or balance, I should say. And then on the next page, you got a statement of revenues and expenditures on the fund statement basis, similar to a P&L, as I mentioned. The only difference here is capital outlay purchases, which you can see under the expenditures, are listed as an expense on the fund statements. Since they're more of a cash in, cash out basis, those purchases, when the cash goes out the door, are going to be listed as an expense on these statements, whereas the other statements, it's just capitalized. And also another difference would be depreciation expense is not going to be included here, since the purchases of capital assets are expensed when purchased rather than depreciated over time. And kind of same thing, the sale of fixed assets, those are just going to be cash received for any asset sales. It's not going to be any kind of a loss for depreciation that hasn't been recorded for the asset as it was disposed, those kind of things. And if you see ending fund balance of close to 1 million, which matches the statement, the balance sheet on the 2 pages before. We go to the next page. This is another reconciliation, this time between the statement of revenues and expenditures and the statement of activities. And kind of like I said, really the only differences are capital asset activity, depreciation expense, capital asset purchases, and then unrecovered cost of disposals for assets that hadn't been fully depreciated yet. And that's how you can kind of reconcile the changes between the governmental activities to the fund statements, how they differ. And really, after all those changes, they came out pretty close to each other. $114,000 decrease for the funds or the governmental activities, and then $96,000 decrease on the, I'm sorry, reverse. It'd be $114,000 decrease in the fund statements, $96,000 decrease on the government-wide statements. And those are your financial statements. The next page here is the notes to the financial statements, which just provide helpful background information on the financial statements. Most of these don't change too much year to year, so I'm not going to go over them in too much detail, although a lot of the statements talk about accounting policies and your basis of accounting, which obviously that did change this year. So a lot of those are updated to reflect modified cash now rather than full GAAP. So we'll talk about that a little bit. But if you want to flip to page 26, it kind of covers that. Page 26 is the very end of the notes. You see note 9 and note 10 here. 9 is the change in accounting principle, just explaining that the district did have a change in their basis of accounting during the year. And that change in accounting principle resulted in a prior period adjustment, which you can see on the note number 10, it kind of goes over that. It talks about what the ending fund balance was, the ending net position for the governmental funds, and then the ending fund balance on the fund statements. And it shows how they both differ once you switch to the modified cash basis of accounting. So it just kind of helps to restate those ending balances so that we kind of are tying our prior year's audit to current year. And this is why they differed when normally they would, your ending balance would always match your beginning balance in the following year. So moving on to page 28. This is a supplementary schedule that's included with your financial statements. It's a budget to actual comparison showing revenue coming in compared to what was budgeted and expenditures went out compared to what was budgeted. And this is required by Oregon to have anytime you have an adopted budget, we have to report this information as a supplementary schedule with the financial statements. So really it matches the fund statements we've already talked about. The only difference is includes the budgeted numbers as well, and then compares actual to budget for both revenue and expenditures. So, okay, moving on to page 30. This is a new schedule this year. This is the schedule of expenditures of federal awards, or the CFA for short. And once you go over the single audit threshold, this schedule is required to be included. And we're also required to do an additional audit testing over compliance with these federal awards. Once you go over the threshold of $750,000 of spent federal funding. So that additional single audit procedures mostly would be kind of compliance testing, just making sure you're following all the grant award specifications. We also do make sure you have, or we do some testing of controls over those awards. And then we include the schedule, including notes to the CFA, and then a schedule of what we call findings and question costs, which is just kind of a summary of the results of our testing. And these schedule of expenditures of federal awards are on the modified cash basis, so it's going to show program award amount received doesn't automatically match the amount expended because timing differences between, most of these grants are reimbursable basis, so they're going to be spent before received. So next year, you're going to get some reimbursements of amounts that were spent this year. So maybe your received amount will be higher than spent. This year, your expended amount was about 150,000 higher. And these are just federal grants. They don't include state grants because the schedule of expenditures, federal awards, and single audit act just applies to federal grants. It gets a little bit confusing sometimes because most of the time, especially for you guys, federal grants are going to be passed through ODOT anyway. So they're really coming from the state, but if they were sourced federally, that's what's going to trigger this single audit and the federal award compliance. Because even when coming from ODOT, we still need to follow the federal compliance requirements. So the next page is just the notes, which I don't think it's too much information, kind of already went over that. If we go to page 32, this is the schedule of findings and question costs, which, as I mentioned, kind of summarizes the results of our testing. A couple of things I want to point out here. We talked about, was there any non-compliance noted, and we did not identify any non-compliance with the federal awards during our single audit. When we do the single audit testing, we don't test every federal award. We just, we have a process we have to go through to identify a major award. So for you guys this year, that was going to be this CARES money that passed through. So that was about, in total, $705,000 that was spent. So that's the one we really focus on for compliance testing. And like I said, no issues were found. We also do some internal control testing to make sure you guys have good controls. Not only, do we want to make sure you guys are in compliance with the requirements, we also want to make sure you guys have good controls in place to ensure future compliance. So there we did identify one deficiency in internal controls, which can be either material weakness or significant deficiency. A material weakness would be more severe than a significant deficiency. And kind of, if you go to the bottom of this page, you can kind of see where we talk about the significant deficiency, which really had to do with preparing the CFA that we use to base all our single audit testing on. At first, initially, kind of going back and forth, we had some issues with making sure we understood the difference between amounts received versus spent and how that plays a big role in, your single audit threshold and what we need to test. And then also just making sure we identify and separate state grants versus federal, which can be a little tricky because it's really going to be where they're sourced, not where you get the money from. And just, I think mostly just because first year single audit, there were some issues kind of getting that dialed in. By the end of the audit, all this was corrected, and the CFA that you see, including the financial statements, is accurately stated, and so all single audit testing was accurately done over that CFA. But just related to some of those issues, we considered that an internal control deficiency that we identified here. And that's kind of where that's about. And, we'll come back to those two letters at the end, but one of those is a significant deficiency letter that goes to the state. And that's really, that deficiency that was reported there is the same one reported here. It's kind of two different reports, one that goes to the state, one that goes to the clearinghouse for a single audit. So that's why it kind of gets duplicated, but really it was just the same deficiency and the only one we found over financial statements or any kind of federal awards. We can kind of come back to that when I get to the state, and also if there's any questions about that, we'll kind of come back. But moving on, after this, the schedule of findings and question costs, there's two additional auditors reports. Those are really related to, one is just the uniform guidance, which is the single audit, so compliance testing controls. Another one is a kind of we call a yellow book report, which the only reason you're seeing that this year when you haven't in the past is because once you go over the single audit threshold, we also have to follow yellow book standards. Most of that is going to be similar to the standards we're already following for audits, but we do need to prepare a second report for that too. So those next two reports are just those, and I kind of already went over the summary of what we found, so won't really go over those in too much detail unless there's any questions about them. But skipping ahead to page 40, this is another auditor's report, so really the fourth one. This one is related to Oregon state regulations. So we're supposed to do some testing over Oregon regulations to make sure, we identify over certain issues, any compliance or regulation violations. We're not required to give an opinion, so this testing isn't super robust, but kind of if you look at the bolded part in the middle of this report, those are some of the areas we look at. And so we do some testing over those, and then if we do see any issues, we would report them here. During our testing, we didn't identify any problems, so there's nothing really to report here, but it's just kind of summary of what we did and the fact that we didn't find any issues. Commonly, this will be like budget violations. A lot of times, over expenditure, or if you didn't follow the budget rules for an amendment, that kind of thing. But no issues noted. So that covers really the financial statements. I'm going to come back to the two letters, and then we'll talk about the deficiency a little bit more. But in terms of just the content of the financial statements, are there any questions or anything you guys want me to kind of look into a little bit more? Okay. So we got kind of going over these two letters I mentioned. One of them is a significant deficiency letter, and the other one's a management comment letter. So the significant deficiency letter, like I already talked about, that's the one that gets sent to the state. Any deficiencies in internal control that we identified as either a significant deficiency or a material weakness should be addressed within 30 days. And you have a plan of action that would get sent to the state of how you're going to address that. The management comment letter is really, it can be just minor violations that didn't rise to the level of the deficiency in internal controls, or it could just be suggestions for ways to strengthen controls for the future. And really this year, our two comments we had were just suggestions for ways to maybe strengthen controls, or even just ways that make it a little easier for us to review as auditors to make sure all the controls are working. So going over those, should be just 1 and 2 bullet points to separate that significant deficiency layer. And the first one is related to ACH automatic payments. So right now there's not a formal approval process of these, and they're just kind of automatically withdrawn from the account. And that's pretty typical from what we've seen for a lot of districts, but one way to kind of make sure that they're getting viewed and, everybody's on the same page of what expenditures are kind of going through this automatic process would be for the board to approve an annual list of these automatic payments and what the vendors are, and just kind of review it annually. Just to make sure that everybody's on the same page, and then it'd also be something for us to test to make sure this control is working. Like if we see an automatic payment that didn't go through the normal review process, we can compare it to this board approved vendor list. Just make sure there's nothing missing that the board's not aware of, type of thing. So that's one recommendation we have, just to kind of make it easier for us to test, make sure there's no payments that are going through without an approval process that maybe the board's not aware of. And that's kind of, I think what usually makes sense is you just take a look at what those payments are going to be, maybe get that approved by the board every year, type of thing. And that probably would be all there is to that. The second one is regarding the payroll approval, which really it's no change in the process that's being done, other than just to include with the upload that's going into the QuickBooks Online, the approval process that's usually done by email, which is fine. But right now it's kind of, we have the supporting documentation for the payroll that we test, but we have to separately ask for those approvals. So I just think keeping that all together will probably just make it a little easier for us to review and make sure those controls are working effectively. And both those, like I said, are just really recommendations on controls strengthening, not really even audit issues necessarily, just kind of recommendations we would have for you guys to think about. So coming back to the significant deficiency letter, this, like I mentioned, is really just reiterating the finding we had for the schedule of findings and questions costs related to CFA preparation, which for Oregon, it's a financial statement finding. The reason it's a financial statement finding this year is because that CFA is included with your financial statements this year when it hasn't been in the past. And really this deficiency was just issues we noted with preparing that CFA accurately to be included with the financial statements. And like I already said, everything's been corrected. We got an up-to-date accurate CFA included with the financial statements now. Just some issues during the process led us to consider that to be a deficiency in internal controls. And so are there any questions about that, or anything, Amy or anybody wants to add to that? I'd be happy to answer any questions or any concerns.
Was that a process we've done in the past and just didn't do it this time, or just something we weren't aware of?
It was brand new.
Okay.
Yeah.
Because it was a single audit required, and this is the first time we've ever had to do it. So it was a little bit of a learning process. And then I think a lot of it, or some of the issues also happened with just historical knowledge. There was a couple of grants that we had that we thought they were federal funds. And so for a long time, it's been listed under our QuickBooks that said it was under the federal bucket.
Or is it reverse since it came through the state? No, it was federal?
It ended up being state, but we thought it was federal. So there was a couple things like that we should have known, but it just, since it's kind of been a historical thing, it just didn't catch the eye. And then there was another one where there was just miscommunication on my end with ODOT in the past of thinking it was federal, but it was actually state. So those that we have those cleared up now. And we are updating the GL codes to make sure it's in the right bucket for revenues. And we're going to work with Emily in the future for next year. She has a very detailed process that she's done in the past or with other clients that her company has done. So we're going to kind of adopt that and make sure that's just part of our annual audit preparation. So we agree with the finding and are just going to learn for next year.
Do you guys agree with the suggestions regarding payroll and ACH things?
Yeah,
So the only difference that it adds is it's simple. The approval for payroll will just be added to the QuickBooks reconciliation process instead of having them separate. We'll just add it to, and just
Okay.
simple addition.
I agree with both of them.
And then
I-
listing all the vendors for us to look at.
Yeah,
Yeah.
and that's something that it's an internal document that we've already been creating, and I think it's good practice for you guys to see them anyways. I mean, you see them kind of every year in the budget. They're kind of in there, but it's not quite as obvious. So I think having a very clear and understanding list makes a lot of sense.
So now we'll see that Tamara slush fund retirement.
Cash out hand.
Our secret's out.
I mean, that list is consistent year to year, I'm assuming, or fairly.
Yeah, it's pretty consistent. It's, it's typically like,
Utilities.
If one's off and the
utilities.
one's on, but it's all for the
Yeah,
same sort of. cause.
technology subscriptions, that type of stuff.
Also, don't know that we have any other questions, AJ. Unless
Right,
Megan, you or Gisela?
No, I don't have any questions.
Emily has something to say, I think.
I just wanted to say thank you, AJ, for all of your work on this audit and for presenting it to the board. I really appreciate it.
Yeah, no problem. And if I'm remembering correctly, there might have been some discussion on kind of basis of accounting that should stick around for, just in case there are any questions. Is that kind of still a plan?
Yes, if possible, that would be wonderful.
Okay.
Thank you. And yeah, I'd like to second that again, which Emily said. There was a lot of discussion at the end just because of a couple of, the things that kind of we have already discussed and just a couple of miscommunications. And I really appreciate you taking the time to walk us through that. So that's great.
Yeah, no problem.
Okay, thank you very much. All right, on to agenda item number 6, the quarterly financial report. Emily, the floor is yours.
Thank you. I would like to draw your attention to the board packet that you were provided for this meeting. There's a couple different, you probably noticed we changed the layout just a little bit for some internal discussion with my firm. And so instead of doing it as like part of the packet, we're kind of doing the summary or review of the information kind of as a separate memo. And then the packet itself is it comes out of QuickBooks basically. So we're just making it more clear that it's just a printing out of your accounting software and it's not an independently like created document. And I tried to
I think those notes at the beginning were really helpful, just to let you know what to look for as you went down through the financials. So thank you.
Yes, you're welcome. The other thing I wanted to draw your attention to is I was just trying to, what we're going to talk about later with the basis of accounting discussion, I tried to make that more evident on the way the packet is presented. So that cover sheet that says that this is your monthly financial report that's on the modified accrual basis of accounting, just to make it more evident why the figures and accounts that you're seeing presented there don't tie to the same accounts that you see on your financial statements that AJ just presented to you. And that's because it's a slightly different basis of accounting. So bear that in mind when we take a look at this. So let's continue to shows like page 1 of 1, I think. It's the statement of financial position, and it's a comparative. So it shows prior year to this year. Again, all of these statements are through the first 5 months of the current fiscal year. So through the end of November. Comparing over prior year, your cash balance is almost identical. You have about $2,000 more this year than last year, with your final cash balance at just about 1.3 million. Your accounts receivable are significantly higher due to mainly $82,000 pledge from the USDA, which is currently outstanding, but I believe it's going to be paid in the near future. Your accounts payable is almost your accounts payable last year about $4,000, and this year it's only just about 1,000, so much lower accounts payable outstanding. But your credit card liability is almost identical, and so your total net position, as you can see between prior year and this year, which is like it's reported as equity in QuickBooks, but it's for governmental funds. So your net position is just about 1.4 million, whereas last year is about 1.3 million. So, or excuse me, 1.4 million versus 1.25 million last year. So you're about $145,000 more. My goodness, my words are not working today. So overall, the district has slightly more money and less liabilities, and that is a positive thing. Moving on to the statement of cash flows, that's just reconciling between your change in cash balance. And your statement of activity shows your prior year to current year. So your revenue has been up, and also comparing to budget, which I know is a separate statement, but I kind of summarize them both together. And overall, I guess the main picture is that your revenues are higher than both prior year and your budgeted numbers, and your expenses overall are lower. So that is positive. Total revenue so far for this year through the end of November was 1.36 million. Last year it was only like 1.25, so about $110,000 more. Your biggest expense generally is your fuel expense, and even that is down from prior year to current year, which is fantastic. We're glad fuel prices have dropped a little bit. Hopefully they stay that way. Your operating expenses also are significantly lower. Communication expense is about $6,000 less. Driver expenses are down. Advertising and marketing is down. And your grant match expenses are up. That primarily has to do with the Multnomah Falls Transportation Ambassadors Program, but it's still within budget. Your expenditures for admin overall are a little bit more than last year. Most of that has to do with the new HVAC replacement that's currently, you made the down payment for. I don't know if the work has actually started yet. Amy, do you know if?
Not quite. It
Not
should
yet,
be in the
okay.
next week or so, yeah.
So you guys made the 50% down payment for the start of that project. So obviously that's a one-time big expense, and the other half of it I'm sure will be paid after completion, but that's the main reason why your admin expenses are significantly higher than last year at this point. It was budgeted for, so it looks like you're over budget at the moment, but it won't maintain that way through the rest of the year because you did budget for that expense. Your personnel expenses are also lower this year than prior year. So the total admin expense is about $90,000. Last year it was about 120. And then the driver expense last year was about 582,000, and this year it's only about 535,000. Capital outlay, you had a little bit more last year than this year also. So far, I think you've installed some bike racks, and that's about it. I know management anticipated that most of your capital expense would be done more towards the end of the year. So overall, trending on budget, and it looks like your numbers are doing really well. So I think I tried to kind of run through that a little faster than last time, just because I know we have a lot to fit into this meeting. So does anyone have any specific questions before we move on to the next page of my little memo I created for you?
Well, I did want to point out too that we did include the statement of activity in cash. So you have it in accrual or modified accrual as well as cash, so you can see the difference. And overall, for like the cost of goods, it's a fairly nominal difference. It was, so for the total expenditures for cash, it was 717,000-ish. And for the modified accrual basis, that was 716,540. So it's like, yeah, it's like $1,000 difference.
So yeah, your net income for the year is about $400,000, which is looking great. Does anyone have any other questions before I move on to the last little piece?
I don't.
Okay. So the last thing I wanted to just comment on and bring to the board's attention is the fact that last year, as you know, you passed the board passed the resolution to change your basis of accounting from a full accrual basis, which is a GAAP basis of accounting, to a modified cash basis. When that change occurred, I don't think there was a very specific layout of what would be included in that modified cash basis. So I'm not sure how familiar you all are with accounting. So I might go I'll try to make this simple without getting too in the weeds on this. So cash basis is cash in, cash out, and that's all that you're reporting. Accrual basis is any liability or any revenue that you've earned but not yet received is also reported, as well as capital assets and those kinds of things. So those are kind of the two most extreme basis of accounting, and they're both very clearly stipulated or outlined. Anything in between those two is a modification. So you can start with cash basis and say, okay, well, we're going to also include though, like capital assets. So that's like what your current financial statements showed was a modified cash basis where it was cash, but then you also showed capital assets. You could go further than that and say, well, we're also going to accrue for payroll or for, you know, some monies that we owe. So the more you are accruing, then you get closer to the accrual basis, but you can land anywhere in that. And all of that is up to the board as far as what is going to be the most useful financial information, both for reporting what you're sending to the public and showing that's getting audited, and for your internal meetings and general management of the district. So anywhere in the middle of that is up to you. And I just wanted to point that out and maybe have the discussion or bring it up so that you can consider having the discussion at a future point. If there are any accruals you want to add either to the financial statements or to the current statements as we're reporting, like what I just went through with you, I would love to just make sure that that is discussed and kind of specified. Does that make sense? I don't know if I explained that well enough, but you guys passed the terminology like, you know, modified cash, but the specification of exactly what you meant by that wasn't made. And I feel like it's important just for consistency's sake that does get discussed.
And I think also just to add on to that too. So in our monthly updates that we were sending you, where it's just the statement of activity, that was fully cash. But the monthly reports that we gave you, because we added the other different items, the AR, the
Insurance.
etc., that made it modified accrual. So I think, you know, this was a year of learning. This was a year of going to a new accounting basis. And I think that what we're trying to ask for is, you know, since we've learned a couple of these things, then we would like to hear from the board of what you really find important in your your quarterly reports. And if you're finding those other pieces really important, and I think they can be valuable, then we just need to specify, okay, this is what we mean by modified cash. It means in general, it's a cash basis, but we want to see these different things in our quarterly reports. Does that help at all? Or am I just kind of restating the same thing? Okay.
Can I add just a couple things to that for?
Yeah, go ahead, AJ.
Yeah.
Okay. So I guess just a couple things I just want to point out. One, we had some discussions about this too, just among, you know, Emily, myself, and Amy, and Tia. But one thing you can do, if you want your board packets each month to have some information, it doesn't necessarily have to be the same as what we do for the financial statement. So if you want some, but you don't necessarily need all those accruals for the financial statements, you can do your monthly packets be different. That'd be totally fine. We have some of our clients do that. And then the other thing I wanted to mention, so kind of the way Emily explained it is correct. There's full accrual, there's cash. You can do kind of, once you're in a modified cash, it's really considered an other basis of accounting, which is pretty vague. And I kind of before we were talking about this, I looked at that a little bit. Like first of all, for GAAP, there's a lot of authoritative guidance on how that's supposed to look. Cash is very simple, so you don't really need a lot of guidance. Once you get in the middle, there's not a lot of authoritative guidance, so a lot of it is left up to interpretation. But the AICPA, which is, you know, the American Institute of Public Accountants, they have some guidance on modified cash. And kind of one thing they say is that they have 3 points. And I'll just kind of read these off. It should be made for a cash receipt or disbursement. So what that means is, like, if you have a donated asset, it's really, there's not a lot of support to put that on your balance sheet because there was not a cash transaction related to that. So whether you're modified cash or cash, really the only way you're gonna be able to put that on the balance sheet is if you're full accrual gap, most likely. That's at least how the AICPA interprets it. So that's one. Two, have substantial support in gap or other accounting literature. So I think that kind of goes back to what Emily's saying, that, you know, accruals for accounts receivable or those kind of things, those have substantial support in general. So I think you could do any kind of modifications from that. And then the third thing is be logical. So I think that's where, I mean, that's pretty vague too. It's up for interpretation, but I think just being careful, like, for instance, if you're gonna do one, if you're gonna have one basis for accruing a receivable and it's different from how you're accruing a payable, I don't know that that's necessarily logical. But I just kind of, and I don't know, like Emily said, maybe I'm getting too far into the weeds on this, but I just kind of want to at least say what some of the guidance we do have, and just come back to this is not authoritative. There's a lot of room for interpretation, a lot of professional judgment. And so that's just kind of some basic context I just wanted to add before you guys get too deep into it. And I will just also say, you know, for us, we do audits for a lot of our clients are modified cash. It's been a trend for districts to switch because you get away from a lot of these GASBs that are going to apply to full gap basis financial statements can be very complicated to implement. So more and more, especially smaller districts, are switching. For our clients, modified cash, how we've interpreted it has meant kind of the same thing as what your statements are right now. And that's kind of for all our clients do it that way. That's not to say other people might do it differently. I mean, I'm just kind of going off my experience with the clients we work with, and a lot of that has been guided by us. So kind of as Emily says, there's a lot of interpretation. You could do things differently. I just think, I don't know, maybe if you guys are going to do something differently, it could be good to do some research on what other governments are doing. If you can find some similar ones, just so you're not going too far out on your own with an unusual basis. But I think regardless, you can kind of do how you want in between full accrual and cash, as long as it's adequately explained in the notes as to what your basis of accounting is going forward. That's kind of the most important thing, just so people who read the financial statements understand how you guys are accounting for things and it's transparent. So just kind of my 2 cents. I don't know if Emily or Amy want to add anything to that.
Emily, do you want to add anything?
Yeah, I was gonna say the one other thing that that's kind of assumed is that it's consistently applied, right? That's the main point of the audit too, is that you can't choose, you want to set a basis of accounting and then continue to maintain that year over year and not change it year after year, because otherwise you don't get the continuity between years of comparative statements. So yeah, that's part of why I think it's important to have this discussion as soon as possible, just so that we're able to specify this going forward. Like, this is officially what the board's opinion is on how they want their financial statements presented. And again, I think it got a little, I stated it, but I think I got a little lost in the weeds at one point. But you can pick two different things, right? So your basis of accounting for reporting, like what the audit that AG does annually, can be different than what your board packets get, that you get each month and or each quarter. So just bear that in mind too, that the information that you want to make management decisions can be different than the information that you are providing to the state and public about how your accounts have been for the last year.
So the intent here was to first just make sure that everybody was aware of kind of these discussions and some of the things that we've learned of, you know, how we've been presenting the board packets and the monthly reports, but also put it up for discussion. If you guys would like us to pursue for January, we can create probably a little bit more description or a little bit more of a visual difference of kind of what we're talking about, and give you guys kind of options of what your options are, of what you would like to see.
Any comments from the board, treasurer? No?
We see some options, definitely.
Yeah, I think option six, I'm used to looking at a P and L, right? Because
Yeah.
we budget towards something, we're reconciling it to that every month. We're seeing if we're on track, and it gives us, we have a target to manage to, and that's easy. I also like to see cash out the door, like what we're paying and understand, what's going out, and then at a high level, any of the grant funding or any of the other stuff we're missing. To me, keep it simple, and our monthly meetings, that's what we agreed to do, right?
Mhm.
Is just understand if there's any major changes going on to our cash position or something we need to be made aware of. It's a high level run through and not a full P&L breakdown.
Yeah.
Okay.
Okay.
Yeah, so if you want to do some options, and I appreciate you bringing it to our attention, Emily, and if you have any recommendations that make it easier on the team or us for guidance, you're way more skilled at it than we are.
If you're looking for my opinion, I would say that maintaining the financial statements the way that they were prepared this year would make sense. The only thing I would consider is whether you want to keep their credit card payable was included in liabilities this year. And that's definitely something that could be removed in the future since it's not yet cash out the door.
That's only like $700 a month, right? From what I saw.
I
Yeah.
think
If
the
that.
liability last year was like $7,000 at the end of the year. Is that right?
But I think that's a little rare since then we really kind of kept the credit card minimal.
Yeah. So just from an accounting perspective, it's a little weird to have like some liabilities, but not all the liabilities, but it is negligible. It's a fairly negligible amount compared to the rest of the financial statements. The only other thing I would say, so for the financial statement presentation, I would say, I think it makes sense the way it was done. The credit card payable would be the only item that I could see removing in future years. And that was AJ and I ended up with a discussion and it ended up being put on this year. But that was just something, again, that I want the board to be able to really specify that this is what this means. The financial statements that you're looking at for monthly or quarterly board packet, I would say it makes sense from my perspective to include payables that have already been billed for, like understand as much money as you're already on the hook for. So all liabilities make sense to me because I think even though the cash hasn't left the door yet, you are liable for that money. So I think including accounts payable makes sense. But that's partially because I'm an accountant.
Right. Okay.
I would just say, just to reiterate that, I think that, what Emily's saying makes sense. I mean, there's a reason why full accrual is normal. And it's because for a consistency basis, if you are accruing, your expenses that you haven't paid, it's likely going to be more consistent year to year. And so I think that, understanding what you guys owe or what you guys receive are going to be due to receive could be helpful for monthly meetings. And like we kind of already said, doesn't have to tie to the financial statements. Just to come back to the credit card thing, that really, I agree with Emily on it. I mean, it'd probably be better to remove it. One of the reasons why we didn't remove it is it was just, it was going to be a complicated journal entry just because it's going to hit a lot of different expense accounts for very small amounts. In total, it was immaterial to financial statements. So removing it next year, I would not consider that a change in your basis of accounting. That's not something that we're going to have to do a PPA for. We could probably just adjust in the current year. And that's just one thing that, one factor to consider is if you do kind of have a more substantial change to your financial statements, it would likely result in a PPA and then another restatement of a change in accounting principle, which I don't know if you want to go into that unless you have a good reason for it. And like I said, taking off the credit card would not be considered that, in my opinion.
All right. Thank you. Appreciate it. Any other questions for them before we move on to our action items? All right. AJ, Emily, thank you.
Thank you.
Thanks.
All right. Now we need to approve that audit that we just reviewed. So we're on to resolution action items, agenda item number 7. Amy, I don't know if you need to say anything else or we've just reviewed the audit. I know the second part we do, but
Yeah, nope, that's it.
Okay.
I reviewed it.
So after reviewing audit, we need a motion to approve the 23 audit.
I'll make a motion to approve the 23 audit.
Thank you, Megan. We have a second.
So moved.
Okay, thank you, Cameron. Any further discussion on the audit? Did you guys take a nap up there while that was going on? Tim fell asleep over here. I was like, Tim, I'm just kidding. Okay, all those in favor of approving the 23 audit, please say aye.
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 Okay, any opposed? All right, chair votes aye, audit has passed. Perfect. Approval of eligible check signers. Amy.
Sorry, before we go into that though, then just one other piece to the audit. And we do have to send a management response to the Ordinance Secretary of State and ODOT. And typically we have to do that within 30 days.
For the CFA stuff or just for the audit?
Oh, for both.
Okay.
And I wasn't able to get it done in time to include in your documents, but I would like to say real quick what, I mean, basically we agree to what they said and we agree to what was recommended for both the CFA, but then also the items that were included in the letter to management from AJ with regards to the payroll and the ACH. We agree with those things, and I would, with your approval, like to approve my response, but with the criteria that I will send it to the executive committee before I send it off.
So
For final
digital
approval.
signature is fine, or just reply by email fine to approve that?
Yeah.
Okay. Okay, perfect.
And that would make it so we don't have to bring it back to the January board meeting to approve just that one letter.
Yep. Okay, so do we need to
If I
amend?
could, no, I think you could just do another approval of that,
Okay.
that piece specifically.
Okay, it's not on the agenda, but we'll.
Well, I kind of added it, part of it, but that was my fault. I thought, anyways.
Okay.
Actually, that's good. Let's see, what did I?
Since it's not on the agenda, do we need to amend the approval of the audit to include the response letter?
Yes.
done?
Sorry, I'm trying to think because I didn't say, but yes, it could be included in that. I broke it out in my memo itself, but you're right, the agenda only has it as one. So
Right.
yes, could we amend that?
Okay.
If
Megan, do you
there's-
mind amending your motion for the audit to approve the management response letter to be approved via executive committee?
So do I say I make a motion to unapprove my motion?
To amend.
To amend.
To amend it.
To amend, okay, make a motion to amend.
All right, do we have a second?
Second.
Okay, any further discussion on the amend to the?
Sorry about that, thank
That's
you.
okay, no problem. All right, all those in favor?
Aye.
Aye.
Okay, any opposed? All right, chair votes aye, and that has been amended.
Thank you.
As stated. Okay, now approval of eligible check signs.
Yes, so as you know, Daryl has left the board and Tamara was voted in as elected as the secretary treasurer. And whenever we have a change like that, we do need to update our eligible check signer list with the bank. So I have listed down here are on the memo, the approved list. So that's Greg, Megan, Tamara, myself, and Jeff. And so the recommendation is that you approve those so that we can send that off to the bank and ensure all that information is updated and remove Daryl.
Okay, are there limitations on any of those?
For the check signer, no.
No amounts that are limited?
So it's the same that's in our financial management policy, which is if it's over 10,000 and it hasn't already been approved in the budget, then if I sign something, I need to have a secondary signature. And then I believe it's up to, I'd have to double check the financial management policy, but I think it's up to 250. And then there's other things that have to, come in play.
Okay, awesome. So I'd entertain a motion to approve the list of eligible check signers to Greg Pack, Megan Ramey, Tamara Taylor, Amy Schlappy and Jeff Coley,
Actually,
Chili. I'll get better at that.
no worries.
We have a motion.
I make a motion.
Okay, thank you. We have a second. Okay, thank you.
Okay, that's like it.
Matt. Any further discussion on check that? Okay, all those in favor, please say aye.
Aye.
All right, any opposed? All right, chair votes aye. We have our check signs. Perfect. We are on to operations manager report. Jeff, please go ahead.
Cool. All right, starting where we always start. Our overall safety score is down. That is, this typo here is actually due to harsh events. Overall, our speeding time, was down, even though we have higher, moderate speeding, our heavy speeding, was reduced. Yeah, the harsh events went from 2 to 5, mostly harsh braking. See, operations data, fuel cost was down. We traveled less miles or less days due to Thanksgiving, and there's 30 days in November versus 31, and the fuel cost is down to 35 cents. Customer reports, we had 3 customer incidents and 1 vehicle incident. And no formal complaints, still no vandalism, which is great. Any questions on those
Just
incidents?
nothing of note on the vehicle incident. It just said small and handled during.
Yeah, mostly small. The only vehicle incident was, yeah, it was another second time this happened. One of our employees' motorcycles parked out front and got backed into by
Okay.
someone else's vehicle, but being handled and damage was minor.
And technically not a district.
Okay.
Covered.
Okay.
Yeah, other updates, we started Gorge to Mountain on Saturday. Just real quick, just for fun, I pulled the ridership so far. We've had 176 passengers.
Oh, awesome.
Yeah, I thought that was a surprise based on conditions, so.
What do you say? The conditions are bad? Yeah, they are. They're not bad. They're just not great.
It's like spring, right?
Yeah.
Okay, so yeah, and then other than the Gorge Mountain's been running pretty good. I think we talked a little about Teacup. We've been working with,
I did see the sign on the lower part of the lot.
yeah, so the sign's still there. One of, Connor went up there to cover it, and he realized that he's not tall enough and needs to go up with other equipment to do that. The drivers are currently stopping at the front and at both stops until we have the stops resolved. The Noel, I don't know, remember the exact title, but he runs the Teacup.
Nordic Center.
Yeah, is it Nordic Center or just Teacup?
Teacup is Teacup Nordic, and he's the chairman of the board.
So
I
yeah,
think they're changing that.
I made him 3 signs, and I'm just waiting. They're supposed to pick them up this week to install those. And then on peak days, they're supposed to be moving the actual Teacup A-frame in and out. So far, no issues, but there hasn't really been any snow for pulling.
Yeah, it's not that busy in
that
there
spot. Yeah. Cool. Employee of the month, we have Ellen Potter. Ellen Potter is one of our choir drivers who shows up to work and always does his job well, and he is let's see about Ellen. Sorry, I should have wrote
He's
it down.
very dependable, and he always has nice cheerful attitude and helps his passengers, and we appreciate him.
Thanks. Awesome. Sorry, I don't know why I froze up on Ellen. Okay, moving on to.
Just a quick question. You mentioned how many riders we've had so far in comparison to last year when we opened.
I could pull that for you.
Just, yeah, it'd be something interesting as we move forward, but you don't have to do it right now.
Yeah, absolutely. Okay, so overall ridership compared to last month, we're down about 19%, and from last year, we're up about 10%. Again, I think the down is because of the well, less service, slower time of the year, plus Thanksgiving and the shorter days of the month. And then I guess for the percentages, we just did the 1 day. Just want to make sure that's what you were looking for before.
Yeah, I just like seeing sort of a rate of change, right? I mean, I think the month over month is maybe less useful just because, like you said, it's so seasonal and you sort of just try to infer what the difference is, whereas if it's a year on year change, it should be more like for like. So I mean, that makes more sense to me.
Cool, and I think I agree. I think it makes it clearer to present as well. I guess the question is, do you want me to go back and do the rest of those, or do you just want me to do that going forward?
Is it easy just like to drag it across? Is this like a huge spreadsheet you got going all the way back, or?
So it would be, we'd have to reference, it wouldn't be super quick, but we have to reference a different spreadsheet to get the numbers that aren't on this one, basically.
Well, I mean, going forward, definitely to see it is great. And you know, in terms of going back, I'm not too fussed really. If it's
Okay.
amount of work for you, just get rid of it, as far as I'm concerned.
Cool.
You could add that spreadsheet right to the existing one, make a copy and add it in there and then pull from it.
Yeah.
Is it, since it's static now, it's not moving?
It's
You get-
that, so we kind of have two different, we have like a board report spreadsheet, and then we have the documentation that leads up to
The
that.
big one.
Yeah,
Right.
so it does, so we can do that. It's not, I mean, there's probably some fun formulas in Excel that we could do to make it easier that we have not yet.
Come on, do the
Figured
fun
out how to
stuff.
do
Bring
it.
pivot tables, do
Macro.
some other stuff, yeah.
Generate.
Yeah.
Okay. Thanks for getting that on.
Yeah,
Appreciate that.
Yeah, and I also, you know, it's nice to see that little green number from last,
Mhm.
the prior
Trend.
month.
A
Yeah.
lot of those.
I did do some quick calculations, and I think if you're, so if you took, so we have December of 2022 on
Okay,
here for
that's
the
a full month,
ridership, that's
yeah.
a full month.
Yeah.
And I know that we did 15 days of that month, so I just divided it by that, and that's 70 riders per day. So, and we've been operating for, did you say so far, or just this weekend?
5 days.
5 days,
Yeah.
so,
Pull down.
yeah, a little down.
Yeah.
Okay, sorry, go ahead.
That's it.
Are you done?
Yeah.
Okay, so I will pick up the Rosar stop. So as you all may or may not be aware, we were told, oh, we lost,
Megan,
She
Megan.
left us a note.
okay.
Yeah, she had to log off.
Okay, all right, cool. Well, we still have quorum, so we're good. Yeah, so as you may or may not have been aware, we were informed on November 30th that we had to remove our Rosar stop, which was in the parking lot of Rosar's, and we were given 1 day to do it. So what we did is we encouraged our users to use the Pacific app and 12th Street location as an alternate for our city route and our Upper Valley. And then we also worked with riders to ensure those that maybe can't make the walk all the way to the 12th Street and Pacific Avenue stop, they can make sure they know they can use dial ride services. The executive committee was wonderful, and they helped me with some communication help and assistance of how to communicate this change to the public. I would say that this was definitely a learning opportunity. You know, luckily we don't have a lot of last minute stop changes like this that happens to us. So I think there's definitely some learning for me to how to communicate to the community when we have a change like this. We did post signs at the Rosar's bus stop before we removed it. The drivers told just about every rider that they could see about the change. We added it to our social media platforms, website, and sent text alerts. We also sent a public notice alert to the community of the change. I mean, this was after the fact, but we did do it. to ensure that people were aware. I think primarily where the lessons were learned was just the amount of information that we gave. I have been researching what additional amenities we can add to the Pacific Ave and 12th Street location. I think the biggest concern in the community is that with that stop removed, there's no space for riders to sit or wait for the bus. And there's also no spots for them to put the carts. So they can't roll their food out to the spot and then put the carts away at a cart location. So I am working with the landlord to see if there's something that we can do to make sure that there is a cart spot located near our stop. I am also trying to figure out how we can add a shelter or a place to sit as well. I'm going back and forth with the city and the landlord to figure out what is in the right of way and what's not. It sounds like there's still some things to dig into there, but I am working on that.
Okay.
And I will keep you guys updated. I also wanted to make sure you guys had some data in the back of your pocket, because I think this, based on some conversations I've had with community members, I think there is probably a need for people to understand how utilized the stop was. So let's first looking at July, there was about 440 people who used that stop on the Upper Valley and the city route. That is our second highest utilized stop behind Safeway, and that's by like a number of people. In November, it does go down to 300, so 210 on the city and 90 on the Upper Valley. So this is a very important stop for people to use food, to get food and services. So I just want to make sure you guys had that in your back pocket as you are talking to different community members and city councilors, etc.
I have questions.
Sure,
Okay.
please go for it.
What precipitated this type of reaction?
From the landlord?
Yep.
So they received complaints from the tenants, so my
Two
understanding.
tenants?
Yep, my understanding was Rosars and Tilly James. They're having issues with riders who were trying to use their space to stay out of the wind or the elements, as well as my understanding there was issues with the carts and not being put back properly or something to that degree.
Has this been an ongoing issue?
So this is actually the first time that I heard that there was any issues with our riders at that stop since
Okay.
I've been in.
No
as
bill, no
executive director.
complaints, nothing.
The drivers have not reported anything?
Nope.
Okay,
The businesses neither.
okay. And we say our riders, but these are community people and their customers too. Okay. The stop there, are we losing anything financially from that? Has there been any financial output from us at the board? Okay. And I'm sorry if I'm taking up people's time, but I really want to understand that,
That's good.
because it's like, if I put up a piece of paper, Greg's still there. So the issues aren't going to go away with homeless people if we try and hide them. So that's where I'm coming from.
Yeah, so and
Right.
I think that's the frustration there. I think the underlying kind of message that I was getting is that some of the issues that were happening were because of houseless individuals.
Thank
I-
you. That's the right phrase.
I do not think that is necessarily fair. So another thing that I think I'm learning a little bit more is there is still maybe a lack of understanding that we serve the whole community and numerous demographics. And we need to be serving everywhere. We need to be serving the houseless community members. We need to be serving the individuals who are trying to get food, or we need to serve everybody. That is our job. We are legally required to do that. But I think it's also unfair necessarily to blame us for some bad actors who might be causing some issues here or there. But of course, I don't necessarily have all that information because I don't necessarily know all the details about the specific problems that led to this. It's just,
Sorry to interrupt, but
Yeah, go
there's
ahead.
no like police reports, there's nobody else is getting involved. It was essentially just, there's some vagrancy, you're out of here.
basically, and we don't, I mean, so this is a spot that we have had for a very long time.
Well, it makes sense, because it's gotta be one of the, as you said, one of the top destinations for people to use our transit, right?
So, and there is some lack of documentation of the agreement to stop there. So it's basically we were being allowed to stop on private property and we were told that we cannot. So there was very kind of little leg for me to stand on. So our goal is to work with the city and ODOT. There's other potential options of doing an inline stop on 13th, which because that's ODOT right away, we can work with them to see what we can do to do that. And so that's the goal, that and Safeway.
The way it happened is unfortunate. I think the improvements that it's gonna push is good, that we're not gonna be, the less we can drive our buses into parking lots is gonna be better for us in the long
Yeah.
run.
So would you stop right there at the crosswalk so they could push the button for?
Potentially, so if we were to go to the inline stop, there's still a lot of research and work that would need to go into that, but that is an avenue that I am pursuing and looking into. It'd be a very kind of lengthy process to even
Have
go
you
down that
approached
way.
like the Hispanic market across the street or Ace, or is that the same owner with the Ace Hardware and that?
So we haven't approached ACE. The problem with that and the Mercado Guadalajara is that, again, we'd be going through a parking lot. So I think our intent is to really kind of focus on this 12th Street and Pacific Avenue stop and make sure we're addressing the concerns that people are bringing up. And then I think then we can reassess and then look at our alternatives. To Jeff's point, I do not like going through private parking lots. It does concern me from a liability standpoint.
Yeah, that's what makes sense.
But
Well-
I think there's some options that we could.
And the 12th and Pacific stop is, right, you added maybe 75 feet from the front door of Rosar's.
Hopefully it's a couple hundred feet.
Is it?
Yeah.
Oh, sorry, I just looked at Google.
Yeah.
So,
We
but it's
actually
not,
did the measurements.
it's not
yeah.
like, it's still close. I think, yeah, I think to Amy's point, it's just we need to make it, it's just a sidewalk with bushes. It's not really, a freestanding sign.
It's also, there's safer pedestrian access going to this 12th Street and Pacific Avenue stop than there was going to the stop that was in Rosar's parking lot. So I think our main thing is that we need to make sure that we're addressing riders' concerns of those who cannot make that walk and to work with them to make sure that they can use that ride access if they need it. And really kind of focus on that first, while acknowledging that this is a very important stop for our riders.
What other exposure do we have?
That's-
Safeway is
Yeah.
a similar situation, I guess.
So-
It's private.
Yeah, that is another one. And based on some conversations, they seem to have some similar concerns. So that is another one that's on my radar of working with
Do we
ODOT.
have an agreement with them or no?
It's another verbal.
How many more out there, that are concerns? That,
That are on private property or,
right,
so those off the top of my head, those are the only ones.
okay. The other locations, there isn't any others that could be potential.
No, we stop at the Odell Market and the Mid Valley Market and the McIsaacs. But those technically are on public right of way, but we do stop at their locations. But those are
Technically the shoulder of the road.
Okay,
Mhm.
All right.
So those are the biggest liability there.
Okay, and so going forward, we just have to decide what the level of amenity that we're gonna strapped to provide at 12th and Pacific, or
What we can, right? Based off,
wait to see if we can put a stop on 12th there further up next to those hours.
Yeah.
Okay.
I would say that there has been a limited amount of complaints from our writers. I mean, there was complaints on Facebook from individuals, but it's unclear as to if those were actually writers or just community members. But the feedback from that, at least I haven't got a lot of negative feedback from our writers with this change.
And I walk my dog along the storefront areas and stuff, so I see that I have a couple of trails that I come down.
Yeah.
And I see the riders that are there, you know, on both the one over by the Rite Aid, I think, whatever you call that one, and then the Safeway one.
Mm-hmm.
And yeah, they are, you know, a lot of times the people that have challenges in their life and stuff, the unhoused. But there's also young mothers that I see with kids, and even people that are like a lot would probably always take a bus, no matter how much money they make, because of the looking at the ecological effect and driving a car and stuff like that. I you know, you can tell those guys because they have.
We have a wide range of demographics who use our
Yeah.
buses. And it does, you know, range on the different services, but we do have a wide range, and I think, you know, that is something that is a good reminder. And our ridership keeps increasing significantly year over year. Not a lot of other transit systems have been seeing the same increase. So I think that's also a very important thing to note.
So you'll update us on this on the next meeting?
Yep.
Once you get there?
I can do that. I'm sorry, what time are we at?
We're running
Five something.
behind, so I was trying to move you on.
Yes, thank you. Appreciate that. Good job, board chair.
Yeah, there you go.
Okay, so the next thing is our TAB conference update. Thank you for allowing me to attend this conference. I think it was amazing. It was incredibly beneficial. Not only did I get the opportunity, sorry, this is just informational update for you only. But not only did I get the opportunity to meet a ton of other people who are in my same position and network and talk to people about some of their challenges, but some of the solutions that they've made to those challenges. But I also got to learn more about the free resources we have from RTAP. So that's the Rural Transportation Assistance Program. It is free to us because we get 5311 funds. And so we get free access to website hosting. We also get free access to website support and consultants. They will do all of that for us. Also learning about
So
more.
will there be a move to move our platform to theirs or something?
Yep, we're actually, it's in the process of doing that. We have a website consultant right now, and I will continue that contract through the end. So she can help us kind of with this move and making sure that everything is set up appropriately. But if everything goes as planned, we will just not be opening a new RFP at the end of her contract.
Okay.
And also learning more resources that we have available to us for driver training, marketing toolkits. Just there's so many resources that we've just scratched the surface on. Also went through a training course of cost forecasting, which will be helpful. Learn some new tricks that I can add to my toolbox when we are implementing these new services as part of the transit master plan. So I'll be able to just making sure that we're forecasting and projecting the right amount of funds that we'll need to implement those services. So that's great. And then the next one is pending grants update. Again, this is informational only. I was hoping to have more information about these, but we are still waiting on the finalized agreements from ODOT for the taxi voucher program and the e-bike lending library. But I will continue to let you guys know when we have more movement on that. I'm expecting that's going to happen more in the beginning of the year. SIFR Advisory Committee update. Again, this is informational purposes only. I met with the SIF Advisory Committee along with Tim and Tia and Sarah, and we reviewed the fiscal year 23 end of year report, as well as the status of the current biennium SIF plan, so all the different projects that we're working on. And we're actually under budget for those projects, which is great. However, some of that funds will be eaten up by the HVAC replacement that we're doing, because we can use those funds for that, which will help great. And that is all for me.
Any questions for the director? Yes.
There had
Don't take your
been,
time. No, ask whatever question you want. I'm not,
Okay.
I'll just try to keep.
I
this
think
moving.
we're now on track too.
Yes.
okay. There was discussion at possibly purchasing land. Is there any movement on that?
So we are still doing our due diligence and looking at potential opportunities that exist around.
Without saying what property it is.
Correct.
Okay.
Okay, good question. Any others? Okay, awesome. Any other, thank you, Amy, for that. Any other discussion items by the board? Any direction for the team?
Enjoy your holiday breaks coming.
Yes.
I'm so excited for the next 2 weeks. I'm gonna get so much work done. I'm so excited about it. Sorry, that is my excitement of the holidays.
And we're closed on Christmas Day.
Christmas Day and
And
New
New
Year's.
And New Year's Day.
Yeah.
Okay.
And that is at our shelters. It's on the website. It's on social media. Yes, I believe that's it.
Okay,
And the drivers have been telling everybody.
all right, any upcoming events? We have just no operation we just talked about?
Yeah.
For Christmas and New Year's Day. All right, any events the board would like to share or make everybody aware? Okay, all right, we're on to agenda item number 12, which is adjournment. Do we have a motion to adjourn?
To adjourn.
Thank you, Matt. Do we have a second?
Second.
All right, Tamara, thank you. Any further discussion? Okay, all those in favor, please say aye.
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 All right, any opposed? Nobody wants to stay longer? All right, chair votes aye. Awesome, thank you. Appreciate everybody's time.
Thank you so much.
everyone.
I thought your report was gonna be longer, that's why I was trying to keep us on. 10 minutes behind.
Good here, yeah.
Happy holidays. Thank you.
You too. Happy holidays.
Sorry.
Tim, I think it's over in the middle.
Now I can say what I really want since we're not recording anymore.
Can.
Wait, I just
Yeah.
one